Good morning and welcome back to another session on review of Indian equity markets. Before we go ahead and review the markets, let me give you a quick disclaimer. I'm not a SEBI registered investment advisor. Uh, the idea of this video is not to induce you into any kind of buy sell action or any kind of trading. The idea is purely educational purpose, and more importantly, I keep this review for myself as a record as to what I have been thinking as the markets close on a weekly basis. With that, let's go ahead and look at what market has been doing for the week. Let's come to the weekly chart first. So for the week, market has seen an indecisive kind of candle where you can see a tail and a wick uh, and a very small candle body. Volumes are something which are slightly higher than what we had seen previous week, but the range of the candle of previous week versus the range of candle this week is obviously miles apart or poles apart. Uh, and does it mean that we should turn positive or bullish about the market? The answer is no. What is the trend of the market? Trend remains upward. Trend has upward bias. Where is the closest pivot in the market? This is the range 19,250. I think until this session or until this level goes, one should continue to hold positive bias in the market. But obviously, we need to consider the fact that overall market there's quite a bit of inflow which has come in the market, and in this week, what we are going to also cover about is not only Nifty and Bank Nifty or a few other indices that we generally look at, but also let's look at a couple of important events that we are likely to face as we go along over next quarter. That would be broadly what we will cover. So coming back to the Nifty, as I said, that this is the pivot which you should have in your mind in terms of trend. Unless this pivot goes, we are still in a higher high and higher low kind of structure. There is a high probability that we may come here, rotate here for some time, and then take off. At the same time, if it is breached, and if it is breached with a wide range candle, so if you see uh, the candle which got printed last week was close to 2.5% as compared to 0.2% this week, right? And how far away are we from the nearest pivot? We are just about 2%, which means can we see a breach of this pivot in the coming week? The answer is very highly probable, highly possible, and given the fact that we've been seeing some loss of momentum, the possibility of downward move is slightly higher than the upward move. It can move down on a sharp candle, it can consolidate and then try to see what is happening in the global and domestic market before it tries to make its next move. That's a high probable action and activity which can happen. At the same time, let's not run ahead of the markets, but just that we should be cautious in this market. This is 30. This is 50-week moving average. This is not daily 50-day moving average. So this is the 50-day moving average. Last week we made a quick bearish or in this week. Let's look at what has happened in this week. So this is Monday was an indecisive candle, followed by Tuesday another small indecisive candle. Wednesday we tried to bounce above 50 DMA with a good tail, which kind of gave some sense of confidence. But look at the volumes were not there. And then Thursday we printed a fairly wide range bearish candle. I think overall, if you see the ease with which the back Nifty is coming down or the indices is coming down is definitely on the downside as compared to upside. This is very different than what was happening in this phase. So it was just moving up. Even if someone tried to push it down, the small minded candles, and then again it was taking out. So you see this. So even though these are wide range candles, but the response from the buyers was pretty good. Range was not breached, and then it moved up again, right? And this is where it started stuttering. But then once again, it got a big flip out here. So I think the nature of this market is purely suggesting that there is more pressure on the downside as compared to upside. You look at yesterday's candle as well. Yesterday, actually, if you were to break down yesterday's market action, right? Now, there's no point in trying to kind of dissect every candle, but just to give you a perspective of what happened yesterday was that yesterday we opened and then we had a good upthrust, right? It looked like we are likely to, absorb the pressure and again try to move up. But then what happened in the second half was again we saw volume pickup. So this is nothing but FIs are coming down every week, every day on in the second half and trying to liquidating their position. Now, obviously, DIs have been matching or just about there on a daily basis. But the fact is, for how long do we kind of counter the FI, right? And we've seen that in March, Jan, Feb, March as well. So broadly, if you were to dissect Nifty, we are below 50 DMA. We went, there was a big downward thrust below 50 DMA. We tried to move above it. Again, we have sold off and we closed exactly at 50 DMA, but the texture of this candle is negative. Let's look at Bank Nifty, which has been the first one to get into negative mode and then kept continuing moving down. Let's see on a weekly basis what is happening in Bank Nifty. So again, similar to Nifty, Bank Nifty last week had a wide range candle, almost 4% candle. Now we are looking at a very small narrow range candle with upper wick and tail. So the problem with Bank Nifty and it's again the nearest pivot is here, and it has not been able to take the high it made some time back. So if you see over last 6-7 weeks, Bank Nifty has just been consolidating, trying to move up, but not been able to make a decisive move. And the width of the candle, if you see, is is far bigger. It's a fairly strong bearish candle, and we are very close to reaching the nearest pivot. If this goes, then I think your Bank Nifty position will have to be diluted. All right, so this is what we are seeing in Bank Nifty. I'll just give you a texture of HDFC Bank because that is the one which is dragging, which is putting substantial pressure on Bank Nifty. Let's come down to HDFC. Yeah, so this is what we saw in Bank Nifty on a weekly basis last week, and this is what HDFC has done compared to what it has done this week. So if you look at the texture of market, it is being purely driven by what is happening, especially the Bank Nifty. It is purely being driven by what is happening to HDFC Bank. It is trying to absorb quite a bit of pressure. There's substantial amount of pressure, downward trend line. If you were to look at indicators, right? So 200 DMA gone, big gap, and then we are just about there on a daily basis. So which is the reason why this week it is a very narrow range candle, but texture is fairly negative. So let's look at some other indices for the week. So pharma is doing substantially well or pretty well through the. Let's again remove the markings out here. Yeah. So pharma had a vertical up move. It is consolidating and it is consolidating in a range for last 3-4 weeks. It looks to be in a great structure. If pharma is able to take out this, then we are seeing a continuation structure in pharma. It's a flag pattern that we see in pharma. So this is definitely an index which is of interest, and if you see the slope of 50 and 200 DMA, it's rising up compared to what we see in a lot of other indices. So let's look at metals. Metals is another space which is doing substantially well. On this longer term basis, it is contracting. Right? So this is classic contraction pattern after a sharp up move. Uh, Obviously, it's a much wider and deeper base which is got created, but being the sector that it is, which is commodity driven, it's always a sector which has high beta, and it will always be prone to some wild swings. So it's just come out of the consolidation pattern. It's correcting. Can it form another higher low? Answer is yes. Uh, so this is another index which is looking interesting. Let's look at FMCG, which also seems to be doing the right thing, and especially with the defensive nature of the market that we are turning into. I think few of these sectors are something which should be part of our radar. So FMCG has been in a secular bull run with some bit of correction. It is consolidating here. Uh, Entry into FMCG, though a bit early, can be, but I think it has got a lot to do with the demographics of the country rather than only the index or few stocks in the index. I think we are a consumption driven economy. It's difficult for us to ignore few of the sectors. You see how FMCG has been consistently moving up. It's not been, barring the COVID, it's not reached its nearest pivot most of the times. Now, obviously, there will be some. This is again somewhere we were writing about FMCG breakout, retest and strong positive trend, right? So this was in 22, 21% return on indices, and few of the stocks have done exceptionally well within these 12, 16 months. This is an area of concern, and one should be extremely cautious with the way this has moved. After many weeks, it has given some correction. Again, we are back into the zone where people are getting excited. Can it move higher? Yes. Do you want to trade it now? No. Look at the distance between 50 DMA or 50 weekly moving average. Let's take it closer. Let's make it 30. Yeah. So it's definitely not in the right space. Same is the case with Nifty Finance. You look at the bearish candle which has got printed. Bank Nifty we've reviewed. Nifty Auto is something which has done exceptionally well. It is showing some signs of tiring out. Uh, let's convert this into daily, and let's put the standard indicators back in place. It's a one-way rally that we've seen from 12,000 to 16,000, almost 30-35% kind of gain. You got to give it some time to consolidate, see what it wants to do. Can it form a pivot? Will it breach this pivot easily, or will it form another pivot here and then try to take off? So you've seen FMCG. Let's look at IT. IT is definitely in an interesting space. Yeah. So this is very interesting. IT has been consolidating for a long while. It broke out. It tried to move up, and then now it is again come back and testing the breakout level. Let's move this into weekly chart. That would be much better. Uh, Obviously, this week we are seeing a minus 3.5% downward push, which is great. But I think IT is one index which I'd be interested in, and I think I'll continue to accumulate this. This should be first spot. This should be second spot. So I think the bulk buying has to happen somewhere here. Let's see what the index does. But in my sense, if the index comes here, it will be a very good opportunity to try and build some more position in the index. I'm doing index because few of the stocks have accumulated much earlier. So this is broadly what major indices have been doing. So as far as the large caps are concerned, let's look at 500. So for the week, as I said, that you're seeing uh, some bit of stabilization, or the downward push in Nifty and Bank Nifty was not as heavy as what we saw last week. So that's something which is reflective here, and it's ended in the green purely because the small and mid caps continue to have a party out in the sun. So this is Nifty 500. Let's look at now global indices, right? Uh, so before we go to some other charts, let's finish off our standard. Let's see these on a daily indicator. Yeah. So what's happening to Nasdaq is it formed a base here. It took off when most of the global markets were kind of getting under or were coming under pressure, and then it just kept rallying. Now it is trying to form a pivot, but the problem is we have printed a lower low, lower high, and lower low. And look at the curve of 50 DMA, slope of 50 DMA. It's turning down. So I think the US markets have not stabilized, and we are looking at some bit of news flow which is likely to come over next 2 3 days from a central bank's monetary policy, both in India and US, which is being predominantly talking about fighting inflation. We'll cover that in next 2 3 minutes. So let's come back to the other large index, which is SPX 500, definitely below 550 DMA, making a lower low and a lower high, and you can see a downward trend line. Let me add 200 DMA as well. That should make things even more clear in terms of the force. Yeah. So we're not near. We've not tested 200 DMA. A test of 200-day DMA can definitely happen, and that also coincides with this breakout level. Now we can easily extend this breakout level, and it coincides with 200 DMA. So overall, I think the trend of both domestic and global markets are not positive. Let me not say that it's very negative. They are not positive. It calls for patience rather than trying to find unnecessarily trying to find trades. Best is to kind of stay aside and see what is happening in the market. There's a small gap out here, but I don't think one should be too worried about the gap right now. But will it become a strong support zone? We don't know. But a test of 200 DMA is a probability. As far as 500 is concerned, let's look at Nasdaq as well, because I think I didn't plot 200 DMA in Nasdaq. Okay, 200 DMA is far away. So let's see what happens. Caution is the word. Not getting excited and over enthusiastic would definitely help. Now let's look at. Okay, so two important things. One more important thing happened this week is that, please pardon me for my previous markings, and I would not remove them because they are of significant interest to me. So let's see. So look at what has happened to bond yield this week. Uh, so this week, so we saw Indian 10-year benchmark going down, going below 707.1, and then giving back the entire gain, and now moving ahead or moving above the previous week's high, and in fact previous 2 3 weeks high. Right? So what happened here was that JP Morgan Emerging Market Index included Indian benchmark, which essentially means that the flow to Indian benchmark would start coming in from April 2024, which means there is an additional buyer who comes into force and who comes into play as far as the Indian government securities are concerned. So, Government of India has found one more regular institutional customer who is going to continue to participate with in its bond issuance program. So, in the long term, what would happen is essentially, as you've got a large institutional investor who's approved your index, or who's, it's like, someone has approved your raw material in one large, got a large contract from one of the largest players in the world, which essentially puts you in a good spot, and you can actually go and start speaking to a lot of people outside that universe to approve your product, right? So that's the simple corollary as to what exactly has happened, uh, and which is the reason why people saw that with so much money coming into Indian bonds. And so while JP Morgan flows will start happening in April, but as a trader, nothing is stopping me from going and taking a position today, right? As the news came, we hit new low, which was last Friday, 710. And by the end of the day, we gave up all the gains. I think it is important to dissect this chart. Let's do that. Right? So you see the gap down with the positive news. We got extremely excited and happy about it. But the next immediate candle, hourly candle, we just kept moving higher. So essentially, what it's saying is that right now it's not the time to get too excited about bond yields as far as India is concerned. I think we can definitely head towards 725, and if we breach 725, then we definitely have some bit of heavy lifting to be done. This is the range that we have been trading in. So let's not do too much of technical dip into this. This is important. The cost of borrowing in India was far higher. It is coming down, and with it was at 9.5% in 2008. Then we went to 9% in 2013 when we had a fairly large crisis in terms of foreign currency outflow, and government was in tough times. Then we had another peak in 2018 when Modi government was under some bit of pressure, right, post demon and all that, and now we are back here, right? So can we go to 775? Looking at the trend line, yes, probably we can go if globally things were to kind of get really nasty. But if that were to happen, I think it would be a fantastic opportunity to make more money in debt than in equity. So this is what has happened globally. The last bit that I want to definitely kind of want you to look at is look at the treasury yield of US 10-year. This is a simpler one, right? Instead of doing all countries, let's just do. Yeah. So this is the pain which has got inflicted on US citizens by tightening, monetary tightening that we are talking about. The 10-year bond has gone up by 300%. Your cost of borrowing, which was at say 1% in May 21, is now at 5%. So there's a huge cost which is rising purely because government wants to clamp down on the inflation pressure that they are talking about. And you look at where we were, you look at the history, we are at 2007 July levels. And it was a secular downward trend. Now we've started an up move. Can it hit 5%? Answer is highly possible. So one has to definitely keep an eye on what is happening in US 10-year. Pardon me, internet is not in great shape. So the 2-year bond, which was trading at 20 basis point or 25 basis point in September, kept moving ahead, and now it is at 5%. Now that's the kind of pain that equity markets are seeing, and which is the reason why there's so much of conversation about US market in deep recession, because this is the fact, and this is going to impact everyone. And if government does not act on it, and we have Fed policy next week, and we also have a policy in India. And this is where Indian RBI has been way ahead of these US guys, because they have just printed money and now they are not able to find the solution to this problem. So, so now coming back to our review, I think what we need to kind of look at is there are multiple variables which are doing multiple things. Let's look at oil as well. Oil, which had started moving up, has shown some bit of respite. So from 96, 97, we are back to 92, 93 kind of levels. So there are too many variables which are happening. So the best thing to do in such kind of play, and this was the marking. I didn't make this marking now, and I made it some time back. So I think too many things happening. Best is stay aside, and not get too excited about what is happening in the market. So as I said, the coming week is crucial from a policy news, and obviously don't forget, in case of India, there is a election which is happening in next 10 months, but you're not going to wait for 10 months to make preparation and policies around election. There you would start seeing the impact of that much earlier than that. So with that, it's a wrap on this video, this episode, and thank you so much for joining me for another week. Have a great weekend, and it's an extended weekend, so have a wonderful time. Thank you so much.